Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Alasdair McKinnon to give his 3 stock picks. Alasdair is fund manager for Scottish Investment Trust. Hello, Alasdair.
Hi, Emma.
So what's the first stock today?
Well, we divide our investments into 3 categories. So I'd like to start with what we call an ugly duckling, which is the UK retailer Marks & Spencer's. Now, retail stocks are very much out of favour. They're seen as being yesterday's news, and there's a general mood that people won't ever shop on the high street again. We think that's not right, and we think in particular Marks & Spencer's is very interesting because they've got a new management team in place, they've got a new chief executive and a new chairman. We've met the chief executive, who's quite an inspiring character, and they're doing all the right things. They are addressing the problems in clothing that Marks & Spencer's has been plagued by for a number of years, and they've still got a very good food business, and they're looking to expand that. So with a 6% yield and a very cheap valuation, we think as sentiment improves towards both Marks & Spencer's and retail in general, this has got good opportunities going forward.
Now, you said the word plagued there because it has several new heads of design have come in and said actually they're going to be the person to turn this around for Marks & Spencer's. There's been celebrity additions of particular clothing ranges. Why now? Why do you believe that actually this time Marks & Spencer's has got it right?
You're right. There's been a series of people who've said they're going to turn it around. I think why we think time is different is Steve Rowe has got a mandate for change. The company realises that it can't mess around anymore. And we've met him and he's put in place a very sensible strategy. He's basically saying, I'm going to end the promotional discounting ethos that existed, and I'm going to start doing what we do really, really well. And they've got a number of basics they feel they do really well in, and they're just going to focus on that. They're not going to try and compete, as they were trying to do, with other retailers who do some things better than them.
And what's the second stock today?
The second stock is our largest holding, which is called Treasury Wine Estates. Now, this is a company we categorise as changes afoot because this was a stock that was very unliked when we first bought it, but it's now become more popular because people are understanding their change that's taking effect. They're an Australian-based wine producer, and they had an extremely checkered history, a number of profit warnings, a number of new chief executives, because the wine business is deeply cyclical. You plant vines, and then for 15 years, you just have to accept that they're going to produce grapes. Fingers crossed. And there was a big glut of wine for a number of years, and these vines, they just keep growing. But eventually, the industry has right-sized itself, and Treasury Wine Estates has done really well with her new leadership, a very inspirational chap running it. They've made great inroads into China. They've got the Australian dollar is really helpful to them as an exporter as well. So we still see a massive opportunity still going forward it's already turned around, but now there's this longer term cycle still to play out.
And what's the third and final stock? The
third and final stock is one we classify as more to come, Nintendo. Now, I think everyone will have heard of Nintendo. They have been around for an awfully long time. They have got some wonderful intellectual property. And we bought this stock when it was, again, very much out of favour. But what we saw at the time was this wonderful intellectual property, a very cheap valuation. In fact, it had net cash. And the fact nobody really liked it. Nobody thought they could fix it. Nintendo have had to change. In a way, they're the Apple of Japan. They do things their way, and they're not going to be told what to do by anyone. They decided they wanted to license their intellectual property. And that first got people interested in the company. You remember the Pokemon Go
phenomenon
of last year. That got people, showed what their intellectual property can do. But the thing that's really got the share price going in the last few months has been this new console they've launched called the Switch. It's you can either play it on your TV as with a traditional console, or you can play it as a handheld. And it's proving extremely popular. In fact, they can't make enough. There's a month's, if you go try and buy it in this country, there's a month's delay to buying one. So we think this is going to be a surprise hit, and it's becoming better known now. But we think this is still an underappreciated stock.
Alasdair, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.